Welcome back, friends. We have seen a little slowing of the global stock markets in the latter half of this week. We saw the Dow, especially the Nasdaq, get into a little bit of a slumber, if I may so say. And even the other markets did go into some kind of a tailspin. In India, we had the Nifty getting brutally assaulted on Friday. And in fact, the signs of it were appearing much earlier in the week as well, because there were many days in the morning session where you saw sudden falls. Now, whereas the entire gamut of bullishness is not run out as yet, I still feel that the stage is getting set for a meaningful correction down the road. Let me explain why I think so. There has been a massive multiple expansion that has taken place in most indices across the world without the earnings really catching up measurably. Now, the genesis of this rally lies in the month of March. As you have been seeing, inflation has been coming down for a pretty long time now. But in the month of March, we had about $400 billion of infusion into the banking system. And that raised hopes of a revival in the monetary system. A lot of the money which was lying in deposits in banks in the United States moved to money market mutual funds. They entered into the credit system, and the credit spreads, which had broadened substantially at that point of time, began to narrow. So we had a situation where people started, as the credit spread started narrowing, the rates also started following the same direction. And there were increased expectations that as the inflation is also coming down, you will reach a point of time where the Federal Reserve could start cutting interest rates as early as next year. And as you know, the markets start factoring all this much in advance. So we entered into a situation where all this was being factored in by the market. And that's why we saw a stupendous rally that took place over the last few months. Also, we have things like artificial intelligence, which began coming on the horizon and raised hopes of a tremendous growth in momentum in stocks. So we have a very exciting week coming up with mega cap names in the technology world about to announce their earnings this week. So it should be an exciting week. Many countries across the world, we have some major earnings disappointments which have come this week. In India, we had Infosys disappointing. Reliance, a mega cap company, a bellwether for many things, not announcing encouraging results on Friday. So all this sets the tone for an exciting start to the week, which may be a little nervous. The rally is still not run out, but I'm just telling you of the state of things that is about to unfold and which should put you on the caution track. After all, do not forget that all this infusion of funds that took place in the month of March also created what is called as a reflexive feedback loop in the markets. So all this is factored in all the macroeconomic models that we take into consideration when we give our predictions. There is going to be a point of time where the markets are going to correct meaningfully. We have the Nasdaq at 30 times earnings. We have the S&P at 20 times. And they look to be vulnerable, particularly those areas of the market which have gone up on a hype where the earnings are not commensurate. If you look at just a tech world, which has been a big tech rally this year in the United States, we have companies like the Microsoft, which still have earnings to growth momentum. We have Nvidia, which is still looking good on the cards. But even in the case of Nvidia, we do not know where the end demand will come from all these chips, because many of the demand chips can be used for the training models and that can be recycled as well. So there is little clarity on that ground, whereas artificial intelligence, friends, is here to stay, but that has been the backbone of this current rally. artificial intelligence. Second is the expectation that a Federal Reserve is going to soon start cutting interest rates. Now, if any of these two will start getting out of motion, you will find that a global stock market rally will lose its traction. And yes, do we have the timeline in mind when this can happen? Yes. For those who have been a continuous part of our Prime and Prime Plus, will be sharing it shortly. And yes, it's an interesting part because it is a very important piece of data that we have used extensive data to be able to come to this conclusion. We have back tested over 120 years of history to be able to come to this conclusion, and we are using that to make our future projections. Now, there is going to be a situation, and it always happens then when it's a one-sided rally that takes place without any healthy, meaningful corrections in between, that always sets the stage for a fall to come. This coupled with the fact that most of the bears that you could see have moved or crossed over to the bull camp. That's not very exciting. The momentum is still intact in favor of the bulls, but when you find that the only person that is lying or is there on Wall Street is a bull, then wow, if experience has it, and people who have been around for a long period of time know that now is the time for the markets to turn. Be cautious. It may be just a behavioral part of investing, but I always consider the behavioral part of investing as a very crucial one in deciding which way the markets can turn. And yes, let me tell you the implications of what could happen if you are caught on the wrong track. You could be sitting with stocks at a time that is going to be probably the worst time. Artificial intelligence scripts have been rising like crazy. Friends, there is a growth, and there is no denying it. But after all, there has to be some conversion into profitability. People keep saying this time is different. I keep reading articles that this is no hot air balloon. But that is what itself sets the stage for me to be cautious. Whenever you find that people start speaking that this time is different, that is the time you should be careful. It was the same in the dot-com era. Now is the artificial intelligence era. There's no denying. After the dot-com, and you saw the internet and the software and everything progressed after that. But what we are looking, I'm not denying the artificial intelligence, but the script valuations, that can get into trouble. And to get to know more, where and at what point of time, friends, please do join our Prime or Prime Plus. For the US markets, we give you predictions. And for the Indian markets, we give you in our Premium and Premium Plus. And yes, friends, those who are here continuously for a good period of time, you'll be the first to know when the market will turn, and you'll benefit immensely. Take care. Have a great investing week ahead. Take care. Bye-bye.